Hello and welcome to this short video which will deal with business interruption insurance, and in this video we're going to deal with a simple claim example. This should be of interest to students studying PDI 04 and indeed any student dealing with any of the commercial modules for the Insurance Institute exams. So let's take a simple business interruption claim where the case of a furniture manufacturer's business has had a serious fire on the 1st of January 2016. As a result, production ceases for 2 months. In the following months, following the rental of a temporary facility and the hire in of new equipment, the production recommences and gradually, after 10 months, reaches its pre-loss levels. So the insured has returned to their newly repaired premises and considers that it's time now to organise their business interruption insurance claim. So let's just get some of the facts again. The fire occurred 1st of January 2016. The sum insured in gross profit is 2.5 million. The maximum indemnity period 24 months. The turnover achieved in the last financial year is 6 million, and the gross profit, again in the last financial year, is 1.2 million. So we have an indemnity period which has concluded in October 2016. In other words, at the end of October 2016, the business was no longer affected by the fire and was back up to its pre-loss levels. There was also increased cost of working, which had been agreed at 100,000, and there was savings achieved at 20,000. So, in dealing with a business interruption claim, there's a number of steps that we need to take. First step is to establish the rate of gross profit. After that, we will calculate the reduction in the turnover between the period immediately before the fire and the equivalent period after the fire. And we're going to apply the rate of gross profit to the reduction in the turnover, and this will allow us to identify the lost profit. We're going to add increased costs, which have been subject to the economic test, which we'll discuss later, and we're going to deduct any savings. Finally, because the policy is subject to average, we will need to check for underinsurance. Okay, so let's have a look on this slide at the turnover of the business. So it shows us the turnover of the business both before the fire and after the fire. So you can see after the fire, there was no turnover in January, February. In March, started at 80,000, built up to 100,000 in April, and so on. Again, you can see that the annual turnover before the fire was 6 million per year. After the fire, it was 2.62 million. So, step one in our claim calculation is to establish the rate of gross profit. So to do that, we get the gross profit in the last financial year, which is 1.2 million. We divide that by the turnover in the last financial year, which is 6 million, multiply it by 100, and it gives us 20%. So we've established that the rate of gross profit for our furniture business is 20%. What actually does that mean? Well, what it means is that for every €1 of turnover that we achieve, it provides us with 20 cents in gross profit. Or, put it a different way, for every €100 in turnover we achieve, it provides us with €20 in gross profit. Next step that we need to look at is to establish the reduction in the turnover for the indemnity period. And again, the indemnity period, so the period in which the business was affected, was from January 2016 to October 2016. So we took the equivalent turnover in the last year, which is known as standard turnover, which is 5.1 million. The turnover achieved during the indemnity period was 1.72 million. So the reduction in turnover is 3.38 million. So the loss of gross profit, therefore, because we're making gross profit at a rate of 20% of the turnover, is 3.38 million multiplied by 20%, which is 676,000 euro. So that's the starting point for this claim. In step 3, we need to add the increased cost of working at 100,000. So this figure was agreed with the insurers. So this figure is the cost of renting equipment, renting premises, other expenditure in order to keep the business up and running. Now there is a check to make sure that what we're spending is economic or it makes sense. So insurers want that for every euro expended or spent in increased cost of working, that it will save at least the same amount in respect of the overall claim. The other area here is savings have been achieved. So savings could be the likes of maybe somebody has left employment, so there's less wages spent, or hire of equipment might not have been as dear as expected. So because there's a savings, we need to take this off the claim amount. So let's have a look. We have our loss of profit at 676,000, that's gross profit. We add the increased cost of working of 100,000, which gives us 776,000, and we deduct the savings of 20,000. So the amount of the claim being submitted to the insurer should be 756,000. The last step that we need to take then is to check for average. So the sum insured was 2.5 million, which represented 2 years or 24 months gross profit. We know that the profit in the last financial year was 1.2 million. If we double that, we would get 2.4 million, which is within the sum insured that was covered by the policy. So average would not apply. Let's just have a look to illustrate the same scenario where average would apply. So if the sum insured had only been 1.8 million instead of the 2.5 million, then the test for average would have been as follows. The sum insured, 1.8 million, multiplied by the loss, which is 756,000, divided by the value at risk, which is the 24 months annual gross profit, or gross profit for 2 years. So that would give us 567,000. So if average applied in those circumstances, the client would only be getting 567,000, which is a loss that they would have to bear of 189,000. Just finally, the calculations that we've used are fairly simple and straightforward, but it does give you the basis of the calculation. In other cases, insurance companies would need to look at the trend. In other words, if a business is increasing their profit by, let's say, 10% each year, turnover needs to be looked at, bearing in mind trends, as indeed does the gross profit and the sums insured. But overall, I really hope that this is of benefit. Thank you very much for watching, and good luck with your exams. Thank you.